Alright, I'm back. Not feeling super great. I don't know why, but I'm still going to do this live stream. Um, I need to do this live stream. I have to journal. So, I'm going to do that. And yeah. Let's see. I'm trying to get chat pulled up on my phone. It's just taking a second. Okay, there we go. Here we go. Got chat pulled up on my phone. Now, as I was saying, going into the market on the higher time frame, I was bearish. I was looking for a sell model. To form to possibly go back to them. You can see that here. You'll note here oh my gosh, can it just let me screenshot and then circle it? I guess if you do it the other way, it won't work. When we get to the equal lows, we have a reversal there, and we don't go hit London's lows. There are two big reasons for that. One, by the time we hit the equal lows, essentially everyone in that accumulation range is stopped out. There's not really a good reason to need to continue to go to London's lows. And then the other reason was there was SMT with something. There's SMT here. The other reason we don't actually need to go hit London's lows is because we got an SMT here. Now, we get a 5-minute change of state delivery that occurs right here. Let's see. Let's get rid of this and this. So yeah, we ended up getting this 5-minute CISD. We end up getting a 5-minute CISD here, confirming this as a cell model after we get the SMT, the draw. The most obvious draw on liquidity is the equal lows. You can look on the lower time frame within this circled area for a lower time frame entry. Right. The most obvious one is we have a breaker right here where we sweep out all these highs. You have these down close candles here. The key is that any trades within this circle will be incredibly high probability because they are within the context of a higher time frame sell model. So let's find an example. I did not see this in lifetime. So there's that 5-minute breaker block, and then here's a 2-minute breaker block and 2-minute for value gap. Within here you can see we have a 2-minute breaker block and fair value gap that form. Once again, this is incredibly high probability since this is within the context of a higher time frame sell model to the equal lows. So you can enter when we retest the fair value gap. Alright, so then we end up getting SMT here. Okay, so then we end up getting SMT at this low here. And we hit those equal lows. And then we get this very, very algorithmic candle at 940. Oh, this was note as well, this was also during the 920 to 940 Hydra macro, which is pretty cool. Then we get this super algorithmic and aggressive candle. Whenever we get a candle like this, it tells you which side of the market smart money is on. In that moment, especially after getting the SMT, I knew smart money was bullish. Okay. Now we had a 2-minute breaker, and for value gap, you could use the wick here. The next trade I know you could have taken is this 2-minute breaker and FVG trade. This breaker has a long wick, so you can mark it out with the wick if you want to instead of the body. Boom, right to all that LRR. Now within this, I was looking to take a trade to target that LRR using just a momentum candle. Let's look at this idea. So boom, boom. Yeah, so once we get this candle where so the idea with this is I would just shoot for 1 2 1, and once we get this really nice, thanks for the liquidity looking candle, looking momentum candle towards the draw on liquidity, which was these relatively equal highs, I would simply enter off of that with my stop loss below the momentum candle. You could also do the same thing off the lower one as well if you wanted to. It's like this one. So yeah, man, this is like a really educational moment because most people don't understand that the market really is just liquidity and highs and lows. So if you get a thanks for the liquidity candle that looks like this, and it wicks below all these lows and then closes higher, I mean that's an entry. Like that is fine. Enter there. Target those relatively equal highs. Within the context of this model, you know it's also going into 8 a.m. So this is a really high probability move. And then same thing, if you didn't get this one, then you could have got this one. So, I mean, very, very valuable lesson with those momentum candles. I think understanding liquidity, you know what I mean? Like, this is something Atonomics says, but he's like, we're leaving entry models in 2024. Because, no, in reality, it is just highs and lows. Like, don't overcomplicate the entry. Just understand, like, when we come up here, all these people are going to get stopped out in this range. So, makes sense to me. Just use not common sense, but just use intuition and understanding. But just use maybe not intuition. The entry. Just understand your trade conceptually. Where are other people going to get stopped out where you can be taking profit. Okay, enter on that, targeting that area. It really can be that simple. Alright, yeah, I think this is awesome. This is such a great educational moment, honestly. I mean, when you see a candle like this that goes wick, close up, you're like, alright, we're going to these equal highs, you know? So, back to the chart now. So, I know Dodgy said that he took this inversion. It's decent. Let's talk about the trade that I actually was going to take. So this will be trade. Now let's talk about the 1-to-1 trade that I was actually considering, that I actually tried to take, but Apex rejected my order because they're fixing bugs with Trade-Away, apparently. It should have been a 1-to-1 win, and since I was going to enter it anyways, I will put it in my journal as a normal trade. So let's get this pulled up. This trade was actually, let's get the spreadsheet opened up first. So this trade was simply understanding that what was it? Was it okay, it was this. It was, we had a breaker block right here, we had a fair value gap here, and we really had not taken out all this liquidity. There was still more above us. So with all that in mind, with this breaker block right here, with this fair value gap here, I entered here. Or at least I would have entered here. Unfortunately, I didn't. My order got rejected, but this was my plan. I was gonna enter here. Stop loss. I'd honestly put it like a little ways down, just because I'm trying to be conservative, right? And then I just target 1-to-1, and yeah, this was gonna be my trade, right? And yeah, pretty good actually. It's worth noting that, yeah, you normally take profit at the LLR, but once again, right now I am just taking 1-to-1s because there's no reason to make trading harder than it needs to be. But yeah, typically on a normal trade, you'd take all off at the LR here, like this. Like this. Alright, let's put that in the journal. Alright, trade 68, copy traded 1-to-1. Yes, I know I didn't actually take it, but I'm still putting it in here because I was going to take it. Like, I literally tried to enter, so I'm going to count that as an actual trade. And yeah, dude, new ratings 1,094. Let's go. That's sick. That's really good. So yeah, sweet. Oh, someone said something. So yeah, this would have been a fantastic trade. As well, this was during the macro, so bonus points for that. For that. Now I'll talk about a 15-second trade that I said no to, but thought it was interesting that it worked out. I don't think it was terrible. It happened earlier in the morning, but wasn't worth the risk for me. So the 15-second trade was, we had a breaker and a fair value gap right here. So this breaker, this fair value gap, and yeah, basically we were delivering from this, and then on the 15-second, we had good liquidity above. Yeah, this actually was not that bad, if I'm being completely honest. But I just didn't want to take it because it was a 15-second. But we had breaker for value gap we were delivering from. We flipped out this low here. And then we have a 15-minute fair value gap. We inverse 15-second fair value gap. We inverse this. And so it was on the 15-second. I was just not wanting to take a loss on this because it was a 15-second trade. And I knew it was probably going to work, but I just didn't feel like taking it. Just because I would have been really mad if it was a loss. Let's just put it that way. But yeah, you can see this 1-to-1 would have hit. And so this was a nice 1-to-1 here. Really nice. I just didn't want to take it. And that's reasonable, right? I'm just trying to take high probability stuff. So we were delivering a Oh, you can't see. Oh, you guys can't see it. Oh, shoot. Whoops. We were delivering from a higher time frame breaker and fair value gap. We swept out all of these lows and then inversed the 15-second fair value gap. Simply, the idea here is simply just target 121. Now, it wasn't worth it for me because even though I knew it had a good chance of working, I would have been upset at myself if it didn't work for taking a 15-second trade. Not really in the context of a higher time frame model, so I didn't take it. Okay. Yeah, I'm gonna make a short form video about this, like, signature and price where you see this giant explosive move. That's when you know what side of the market smart money is on. So, like, let's say you get an S&T right beforehand. You know, okay, the market's probably gonna be a buy model now. So, especially when it happens going into 10 a.m. So, honestly, I think that covers most of journaling. Yeah, there was a little bit more, but there was this 15-second or this 1-minute inversion, the 30-second inversion after taking out the LRLR. That's just not my style of trade, though. Like, yeah, it was a good reaction to the high, but personally, I don't like taking trades that don't. I like taking trades that look more like this, where you have obvious liquidity and then a move up to go run through all of that. I don't know. It's hard for me to catch these 30-second inversions like this, but I mean, this is a good trade nonetheless. We'll just mark it out. Whoops. Then there was, oh, that's not the right picture. Come on, screenshot. I think that about covers it for the journaling today, because I guess I could go further in detail, but I already covered, there's a lot of trades I already covered, so I think what I might do now is actually look at this. Well, we'll mark this as well because I think this is relevant. Look at this. Where is it? What do you mean shorted or long? I'm just backtesting right now. I'm just talking about trades you could have taken. Yeah, we had this breaker and for value gap. This was a decent trade. Going into whatever it's called. I took a live trade, but Apex, I didn't know Apex was down, so my order got rejected and I didn't know what was going on, and it was literally just because Apex is down. So, but it's back up now. But it would have been a win. So it would have been a 1-to-1 win. But unfortunately, yeah. No, I'm not trading right now. Right now, I'm just journaling, backtesting. I already was on the charts for quite a bit this morning. Yeah, they're back up now. But I didn't know that earlier. All right. And then very similar situation right afterwards where actually nah, this is more like a 5-minute trade. Let me delete this. This is more of like a 2-minute trade where you have a series of down close candles. That's a breaker. You have a fair value gap here. This overlapping area is your entry, and boom, the rest is history. Down to that LRLR. Let's get rid of all the other stuff on the other side of the screen. Okay. I guess maybe you could have taken this inversion here. I don't know. Not super my style of trade to take this inversion, but maybe you take this. It'd be more my style of trade to take. It'd be more my style of trade to take this breaker for value gap right here. I'd probably just put stop loss below the breaker. All right. Don't want to say that. I'm not gonna say anything else. All right. I think that about covers it for today. Yeah, I think every day we get a little better. At least I'm getting better. I don't even know who's watching, but yep. I will see you guys in the next one.